All right, so today's class is going to be over risk management. So we're going to go over risk management, position sizes, and let me know if I can hear me fine because sometimes my mic goes out, but we're going to be going over risk management, position sizes, and then brokers. And then our second class is going to be creating a trading plan. So let's go ahead and get started. Let's see here. Why is this not going down? Give me just a second. There we go. If y'all have any questions, feel free to come off mic and just ask me. And I got you. All right, so we're going to be going over what does risk management look like, leverage and margin and why it matters, risk management tools you can use, and different brokers. All right, so risk management, to me, what risk management looks like is a predetermined percentage or amount of cash you're willing to lose per trade. Entering trades during a session where volume and volatility is present, following your trade plan, and then making sure you keep your vices in check. And your vices could be fear of missing out, also known as FOMO, revenge trading, or catching fallen knives, which is where you just don't give up on a losing trade. You just keep hoping it's just going to reverse back into the direction you hoped. Thank you, Kaylee. This is a bit of a different class because we're not trading or showing charts. But at the end of this, if we still have time, we can go over anything from the previous classes if you guys like, if you have questions. Thank you. All right, so leverage and margin and why it matters. So typically, the lower the leverage offered by the broker, the more money you need to place positions in the market. So we're going to go over how to know what lot size to use, and that is going to have some math, but don't worry, you don't have to know the math by heart. We're going to go over what a margin call is, and we're going to touch on flipping accounts that kind of tie in together. Okay, so in Forex, a standard lot size, which is 1, is equivalent to 100,000 units. Now, if you're trading on MetaTrader, you may not need that information to speak but if you're on TradingView, you do need to know your units. So if you keep that basic formula in mind, 1 lot size is equivalent to 100,000 units, then you can typically convert when you're trading on TradingView, if that's what you choose to do. But if you're just on MetaTrader and you're trading Forex, 1 lot size, and we can go into the math for knowing how to get a smaller lot size. So to know how many units is in your lot size, you just multiply that lot size by 100K. So of course, 1 times 100K is 100K. And then you do the same thing the lower you go. So if you put in a 0.5 lot size, you multiply that by 100K, that'll give you the number of units. If you want to know how many dollars per pip that your lot size will give you, you'll multiply by 10. So if you have 1 standard lot size, you're getting $10 per pip movement. Most people don't use the opposite formula, which is if you want to divide your lot size by 100K. So I'm not even going to go into that because typically when you're trading Forex, nobody uses that formula. They don't go backwards. Okay, so the leverage. So how this ties into leverage. So we have 1 to 50, which is typically what U.S. brokers, regulated U.S. brokers offer. So Oanda, Forex.com, they're going to give you 1 to 50. And that's what they advertise. Sometimes it's going to be even smaller depending on the instrument that you trade with them. So say you want to trade a minor pair, it may even be smaller, like 1 to 30. And then you have the 1 to 500, which is typically what everybody gets. This is with unregulated brokers or brokers that's not regulated within the US. They're going to offer you 1 to 50. So why does this matter? So if we divide 1 by 50, you're going to get 0.02, which is 2%, right? So what that tells you is you need 2% of the trade in your account to hold that position size. So if you multiply, so if we're doing a 0.10 lot size, which is $1 per pip, Okay, and we multiply that by 2% in the decimal form, it tells you you need $200 in your account to keep this position open. Now, versus the 1 to 500, if we divide that, you only need, I think that's 0.2%. So that translates into you only needing $20 in your account to need that position open. So this is why a lot of people would open broker accounts with people like Sway Markets, Henko Trade, all those brokers. They offer 1 to 500 because you can start trading with such little amount. Now, what happens when you have a 1 to 50 leverage account and you try to open up a larger position size? It's gonna take up what's called margin. So say you have $1,000 in your personal account and you have 1 to 50 leverage, it's going to take away $200. Like it's like a savings account. It's going to take out $200 out of that to hold the trade open. So if you start over leveraging or putting extremely huge lot sizes on an account with 150 leverage, you're going to eat into your margin way faster. And then if those trades starts to go against you, they're going to go into the red. And what's going to happen is you're going to hit what's called a margin call, and they're going to start liquidating your trades by starting by the largest one that's taking up the most margin. So I don't know if y'all have played around with a demo yet, or if y'all have seen that yet, but if you like just go ham and just open up a whole bunch of trades, or you start putting 5 lots on it and your leverage doesn't account for that, you will get margin called. And then sometimes you can just end up blowing your account altogether because sometimes they'll take all the trades out. So typically people stick with the 1 to 500, which is, it gives you breathing room. You can place larger position sizes or, place more positions in general, but you want to be careful because that can be a double-edged sword, because if you trade heavy, then that risk can come back to, haunt you. So just be careful with that. Is there any questions about that so far? Did everybody understand like the big gist between low leverage and high leverage and why they matter and why people like the higher leverage? Everybody cool? Yay, say yay, nay in the chat, or somebody say something. Okay, cool.
Yay.
Okay, good. Because I did not get teach this, guys. It took me like 2 to 3 years to figure out. I figured this out on my own, and it was so confusing. And it's imperative for your risk management to know why the leverage matters. So we went over that. We went over margin call. Also, this formulation is based on major pairs. So anything that's attached to a USD, that's what this formulation will matter for. But if you're dealing with minors or exotic pairs, the calculations will differ. So some will take up more margin than others. So in that case, you would want to use a position tool, calculation tool, and we'll get into that too. All right, so some risk management tools you can use. So the first one is myfxbook.com, which has the position size calculator. And then also, if you're familiar with TradingView, they have the long position and short position tool you can use to measure out your stop loss and measure out your risk to reward. They also have the bracket order ticket feature, which will also tell you what your risk is in pips and in dollars. And then they don't offer this anymore. I just realized this today, but if you are trading like a prop firm account and you like to trade on your computer, you used to be able to have something called Trade Assistant, which will literally calculate everything for you. Like you put in your account size, you put in how much you want to risk, and it used to give you your lot size automatically. So they took that away though. So I don't know why, but explain margin one more time. Yeah, sure. So your margin. So I'm gonna try to go back. So when you divide, like you actually divide the 1 by whatever your leverage is. So if it's 1 to 50, you divide the 1 by 50, which gives you 0.02. And then whatever lot size you want to use, multiply that by the 100K or the 100K, and you'll get your units, right? So you want to multiply the units by the leverage percentage, which is 0.02 in decimal form, and it'll tell you how much you need to have set aside for that one trade, and that will be taken out of what's called your margin. So if you ever look on, I should have did a print screen of it or a screenshot of it, but if you're in MetaTrader and you look at your account, it'll show your account balance, And let me go to it actually. So it'll show your balance, your equity, which is what's floating, your profit or loss. And then it'll have something below it called margin. So, and then it says margin, and then it says free margin. So margin is how much they've taken out of your total balance, like that you started with to hold the trades open. And then free margin is what you have left. So that'll be how much more you could utilize. So the 200 would be your margin. And then if you had $1,000 in your account, if you deduct 200 from that, the 800 will be your free margin. So you have $800 left of buying power. So every time you open a position that is a 0.10 lot size, it's taking $200 out of your margin. Does that make sense?
Yeah.
Okay, cool.
I have a question.
Uh-huh.
I don't know if you already have this as a slide, but do you have slides that show you the different types of lot sizes, or
I don't,
like,
but I can definitely pull up like a screen and I can go over that for you guys if
thank
you
you.
like. No problem. What's the appeal of having smaller leverage? Why not just get 1 to 500? It's more like we don't have a choice. So in the US, they don't never like to see us little people win. So they put 1 to 50 leverage is only allowed by US regulated brokers. That is the law. They cannot offer more than that. But then everybody outside of the US, they're like, well, y'all make money, we make money, so we want to help you make money. So we're going to offer you the best leverage we can offer you. And I know some countries even offer 1 to 1,000 leverage. Like it's crazy. Like you can literally like put in $10 and make a whole bunch of money off of that. So yeah, so people just
this light.
huh?
Right.
Somebody say something? Okay, so yeah, so 1 to 500 just gives you breathing room. Like if you have your trading risk management under control, 1 to 500 is just gonna like let you trade with, without the restrictions of what a 1 to 500 leverage account would do. So you would have more room to breathe and trade, and don't have to worry about, oh, I have 2 trades in there already, I might not be able to put another one in. Versus the 1 to 50, you're gonna have to make sure you're not putting it probably won't allow you anyway, but you probably be limited to like 3 trades or something at a time. All right. Any more questions on this before I go forward? Okay. All right. So I went over the different types of tools. I'm going to show those next. This one is no longer valid right now. I don't know if they're going to bring it back, but this was very helpful for people who traded prop firm accounts because it measured everything out. It would give you your lot size after you put everything in. And then when you enter your trade, it would put your stop loss, your take profit with that lot size in there for you. But they took that off of the MetaTrader market. So I swear, I feel like things be working against us on purpose, but all right. So the first one here is TradingView's bracket order or ticket, whatever you want to call it. So you would literally plug and play your different things into this. And I can show this later on TradingView if you like. But I say these two work hand in hand. This is the short position tool, and they also have a long position tool. So when you're ready to place your entry on the chart, you would plot that on there. You would move your stop loss up or down. Like most people put it above or below the high or the low. And then you'll move your take profit down. I always say move it down to an area where you get at least a 1 to 3 risk to reward. You will be able to know what your risk to reward is if you look in the middle, and it'll tell you right here, this is a 1 to 4.05, but we're just gonna say 1 to 4. And then right here, it says, this is actually on the futures, but we're gonna pretend like it's a currency pair. 81 pips, and then down here 328 pips. So if you use your long or short position tool on TradingView, you can plug these numbers in the corresponding fields here. Thank you, Chick. And it'll calculate everything. So down here in these fields over here, it'll tell you right here, here's a dollar amount of take profit, here's a dollar amount of stop loss. It'll also tell you down here, it's going to tell you in multiple areas. That way you are 100% sure how much you're risking before you hit buy or sell. Okay. Then this over here, again, this was the trade assistant that's no longer available. If you, as you can tell, it looks exactly like the short and long position tool on TradingView. But what you would have done was you would have went into your settings and say your prop firm account was for 25K. You put in 25K. And then right here, if you wanted to risk 1% per trade, you just put in 1%. And then over here, you would have put in 1 to 4, 1 to 3, 1 to 5, whatever risk to reward you wanted for your trade. And then once you put all that in, you just decide when you're ready to enter a trade and then hit the line button, and then it will plot this automatically for you. And then you hit buy or sell, and it would do all the heavy work for you. It will calculate everything for you. So as right here, you can tell with all the settings put in, it calculated a 0.58 lot size for this trade. So yeah, I don't know why they took it away, but yeah. And then the last tool is the MyFX position calculator. So if you don't want to do no math or you're not used to lot sizes yet, you can just have it calculated for you. So I'm going to go ahead and click on this and go to the tool. Okay, so we have the tool here. So you'll put in your currency pair. So this is very helpful for minor pairs or exotic pairs. So you'll put in your pair, you put in your currency that you're using, and then let's say we're doing a 25K challenge, so we can put in 25K, and then I like to only risk 1%. So we put in 1, and then you'll put in how many pips is your stop loss. So we'll just say 10. You'll keep this at 1, and then you hit calculate. And then it'll tell you how many lots you'll use. So when you enter your trade, you'll put in 2.5 lots. And then this is how much you're risking. So you want to make sure this number here is exactly 1% of your total account, because we're only trying to risk 1%. So if this is different, something's off. So I will give the link for this as well. Does everybody understand how to use the position size calculator?
Yeah.
Okay, cool. All right.
Actually, so where it said stop loss pips, we would just find that on that short or long position tool, right?
Exactly. Mm-hmm.
Okay.
So before you even get to figuring out what your lot size is or anything, you should have your chart marked up. You should have your entry marked up, and you should have your short and long position tool ready plotted with your stop loss already measured out. That way you can just plug this all in and get your lot size to enter. All
Okay.
right, so here's the different brokers. I do have these listed in our tab. So of course we have them separated by US citizens and non-US citizens. So sway markets is actually regulated outside the US, but they still offer 1 to 500 leverage. I've been using them so far. So far they're good. A lot of people love Henko Trade. I don't have a lot of experience with Henko Trade, but a lot of people love them. And then we have OANDA, which is US regulated. So of course you're going to get that 1 to 50 leverage that we were discussing earlier. And then of course, we have the non-US citizens brokers. I'm familiar with 8cap because a lot of prop firms use 8cap, and I think markets as well. I'm not familiar with the other ones, but again, I'm a US citizen, so but I know off rip think markets and 8cap is heavily utilized within the prop firm industry. Any questions about the brokers or anything at all?
What does the broker do for you?
The broker is the trade desk. So you have MetaTrader, which is basically just the platform that the trade gets submitted through, and then the broker is behind that. They actually is submitting the trades for you on your behalf. And then of course they get paid, they get money from the commission fees or the spread. So one or the two or the other. So if you ever realize sometimes you'll pay to play. Basically, when you enter a trade and exit a trade, they take a little bit off the top, and that's how they get paid. Hanko Trade, I don't think they do 1 to 50. I thought they did more, but I'll double check that just to be sure. But I thought they did 1 to 500. I hope not. Okay, so anything else before we move on to the breakdown? Oh, you did. Okay. Yeah, 1 to 500. Yes. Um, anything else before I move on to the lot sizes, like breaking down the different lot sizes? Okay. So let's see here. Right here. Now everything wants to move slow because I got zoom up. Okay, can everybody see my blank chart screen over here?
Yeah.
Okay, cool. Um, I don't know why it's not letting my thing move out the way. Okay, that's fine. Okay, so we're going over lot sizes. No, it's not really much to it, really. But the standard ones you'll have is 0.10, which is equivalent to $1 per pip. Okay, and then next we'll have the I'll go up to we'll do 1.25. That's $2.50. And I think y'all are getting the gist here. $5 per pip. You're just multiplying your lot size by 10, and that'll give you how much you're going to. So if you have a 20 pip stop loss and you're entering on a 0.10, you'll just multiply that 20 by $1 and you'll be risking $20. And then next we have one lot size, 1.0 lot size, which is $10. And then so forth and so forth. So that's how the lot sizes work. Does that make sense? Or do y'all need me to delve any further into that?
I watched a video, and this girl said that there's a pip that no one ever uses until their account is like really large. Would that be like a 10.00 or like a 100
10-0 is
point?
very huge, yes. You
Okay.
probably, I mean, if you're trading like the huge prop firm sizes like 100K and up, I think they even have like some
Mm-hmm.
300K accounts, you may, if you compound up, may use a 10 lot size, but you really have to have a good cushion of capital to trade that. And some
So
people's
a
psychology can't
10,
handle it. Sorry, go ahead.
oh, so would a 10 be like, would that be considered $1,000 or $100 per pip?
That's $100 per pip.
Okay.
So
Yeah.
if you're doing a
Okay.
10 lot, matter of fact, let me break it because I don't do a lot of math in my head, but let's say you have a 20 pip stop loss and you are doing a 10 lot, you're risking $2,000 on that trade.
Jesus. Okay.
Yeah, so if you're risking 1%, you need to have at least a 200K account to trade that lot size. And even
Whew.
then, that's still, some people can't handle watching that move on a screen because that drawdown is going to look crazy if you do enter drawdown. Yes. So yeah, you're risking $2.50 if you do a 0.25 lot size. Now, again, this is for USD pairs. This will differ if you if you do a 0.10 on Euro JPY or NZD. What's another mixed up one? AUD, NZD, any of those weird looking pairs, minors and exotics. This will not be the same. This is only for majors. So you want to use that lot size calculator to get an accurate depiction of what lot size you should be using. Because if you enter, I think I entered JBP, JPY earlier, like in my trading career on, I think it was a lot that I was using, and it was moving heavy, like crazy. I was like, whoa, like, okay, I didn't expect it to like be that much. So, and that'll happen a lot with the GBP. pairs that aren't paired with USD. So just be careful if it's not major, it's not a major pair, break out the calculator. If you're being heavy on your risk, like if you want exactly 1%, you have to use the calculator. Now, if you say, okay, well, you know what, it's gonna be roughly around there and you're okay with that, by all means, just be aware. So any questions about that?
So
Okay.
0.10 is $1,
Mhm.
1.00 is $10, and
Mhm.
10.00 is $100.
Mhm. You're just
Is there any more
multiplying.
after that?
You
Like,
can go as high as you want, as your risk
okay.
tolerance will allow, but just know whatever lot size you plug in, multiply it by 10, and that is how much money you're risking per pip.
So I'm assuming if it's 0.010, it's 10 cents.
Yep, that's correct.
Okay. All right. Thank you.
You're welcome. Anything else, y'all? I
So
think we have a little bit of time if y'all want to go over anything else.
can we relate that back to the My Epics book
Yeah, sure.
example that you gave us?
Mm-hmm.
So when it
Sure.
says sizing 2.5 lots, are they saying you're risking $25?
Yes, so if you are gonna plug in the 2.5 lot size that they recommend for this account size, then yes, you'll be risking $25 per pip.
Okay, thank you.
Mm-hmm.
And that would be 10 pips technically that they're risking, right?
Yes, so this you
Okay.
have to figure out how many pips ahead of time you want to risk, and then it's
Mhm.
gonna you plug all your stuff in, and then what you should have if you use your short and long position tool, you should know how many pips you're risking. Always know how many pips you're risking before you try to figure out your lot size.
Okay.
All right. Any other questions?
Can you show it on TradingView? Like if you like try to plug it in, because I know you had a screenshot of it.
Yeah, sure. Let me go ahead and go back. Why is this? For some reason, my toolbar does not want to go down, so it's hiding all like the little. All right, can y'all see this bracket window here?
Yeah.
Okay, good. All right, so let's say, let me put the price back on. So let's say we want to enter for a buy. Gosh darn it. Okay, so long position tool right here. And then you move your stop loss. Just do it below this low here. And then we'll bring it up to this high. I'm gonna move this down because it's turning my middle thing black. Okay. So we have our long position tool set for our position. So, we're risking 5 lots, which is just really small. That's really good, actually. So we're risking not 5 lots, 5 pips. And then our take profit is 21 pips, 21.3 to be exact. And our risk to reward is 4.26. So we'll just say 4. So this is a really good trade. This is an ideal trade. So when you have your bracket order open, so TradingView is going to measure your lot size in units. So in order to convert your lot size into units, first you need to figure out what your lot size is going to be. So let's say we pretend we plug this in, like I can actually do this now. So this is Euro GBP. Let's say we're doing a 25K account or risking 1%. Our lot size, our stop loss is 5 pips. We'll calculate. We know we need a 3.9 lot. So we multiply our lot by 100K. That will give us our units. So that is 390K. So if you plug that in here, that's going to be your lot size in units. And then of course we have buy. All right, our take profit is 21.3. Our stop loss is 5. Okay, and then in the middle, in a gray, like gray tinted font, it should tell you your risk to reward. It should match what's exactly in the middle of your long position tool. So 4.26, 4.26. If you come down, it tells you you're risking. Okay, my account size is not going to be accurate because this is paper trading, but this is right in this number right here, which is crazy. Over $1,000 for take profit, and you're risking $250. Oh no, that's right. Okay, $250 for your stop loss. So that's how you would plug and play based off of TradingView if you're using TradingView. So I know a lot of people get confused with the units. Just multiply when you get your lot size, multiply it by 100K, and that's your units. A lot of people don't like that, so they don't even trade Forex on TradingView. They just use their MetaTrader on their phone, which is much easier for them, which is understandable. But did that make sense?
Can you say it one more time?
Yeah, sure. So we got our trade, we measured out our stop loss, and we measured out our take profit. So when you do that, it'll give you all the numbers you need. So here in the middle, it's always going to be after the percentage in the parentheses. So after this one, it's five pips for your stop loss. Up here, it's 21.3 for your take profit. And then in the middle is your risk to reward. So you just put a 1, it's 1 to 4. You just put a 1 in front of it to get your risk to reward. So once we have all that information, I went to the position size calculator and I plugged all that in. So we have our account size, how much we want to risk. 1% is recommended. Our stop loss in pips, which was 5. And then this will always stay 1. So then we calculate that. And then it gave us our actual lot size, which is 3.9 lots. Now, if you were trading on your phone on MetaTrader, you could stop here and just put in 3.9 lots and it would take it. But say you, for some odd reason, you wanted to trade on Forex on TradingView, you would have to multiply that 3.9 lots by 100K. And that would give you your total units because TradingView goes by units. And then, of course, you would plug in your take profit number and your stop loss number in pips, which is still on the long position tool here. Did I lose you, or is it making sense?
Yeah, I got it now. Thank you.
Okay, no problem. So that's how you would utilize those tools to formulate your trade. Is it bad? No, it's not. It's just more so like if you like say you signed up with Oanda, some people who prefer like to have a one-stop shop, like so they have an Oanda account, they'll just trade on TradingView because TradingView connects to Oanda. So they don't mind doing the calculation for the units. Is 1 pip a 0.0001 change in price? So that I still get kind of like I'm having many strokes, still trying to figure that out sometimes because I know like some pairs don't have 5 digits behind their decimal. Some have 3, some have I think even 2. So I can't say that for sure. I just know if it moves up or down, that's the pip. So I can't really say how many decimals behind is the actual measurement of the pip. So I just go by what the like if I take out my measuring ruler here and I click and I move it up or down and it tells me it's 19.4 pips, I'm gonna believe it. It's 19.4 pips. Okay, any other questions? I think we have like 2 minutes left on this session. This will be recorded, so if you need to go over this again, you will have it. But yeah, the next class will be over trading plan. So I'll be going over how to formulate your trading plan, what you need in your trading plan, and we'll discuss everything regarding that. What tool did I the little ruler. So if you look to your left of your chart, there's a ruler right here. You just click on it and then just click on anywhere on the chart and you just move it up and down. So if you want to know how many pips this swing high was, you'll just grab it, place it right here, move it up. And that was like a 26.9 pip move. Or I think you can hit control. No, shift. If you hold shift down and click on the chart, it'll also do that. Yeah.
I don't know if you can answer this before the 2 minutes, but can't you do a bracket order on there too?
Yeah, sure.
Or okay.
So I already plugged everything in, but I'll do it again just to be sure. So we got our lot size, we measured it, we multiplied it by 100K, which was 390K. So I plugged that in here. And then our take profit was 21.3. Okay, our stop loss was 5. All right, make sure the stop loss and take profit is checked off so it'll place that on your chart for you. Okay, and then we're gonna do a market order. Market order means it's just gonna enter wherever price is currently on the chart. If you wanted to enter exactly at where you have it placed, you would do a limit order. And then you would put in the price you want it to come down or up to, and it'll enter you when it activates at that level. But we'll do market and then I'll hit buy. Okay, and then as you can see, there's a bracket on my screen. Here's our take profit level. Here's our stop loss level. Here's our market entry. You can move your stop loss up and down. It'll tell you how much you're risking if you move it. And you can move your take profit up and down and tell you how much you're going to get when it hits TP. Okay, I have less than a minute, guys. Yes, you can set multiple TPs. I can go over that on the next class when we go over trading plans. I can show you how to do multiple take profits. All right, guys. Before it cuts me out.
Someone said that can you show it on MetaTrader? Can you do that next class?
Yes, I can. I will definitely do that. Remind me and I'll definitely do it. I'll write it down as well.
All right.
All right. I'll see y'all in the Discord. Bye.